The Retirement Cafe podcast, Money, the Made Up Thing with Jacob Goldstein. Hello and welcome to another episode of the Retirement Cafe podcast with me, your host, Justin King. If you're thinking about your retirement or already retired, you're in the right place. My aim is to help you plan for and live a successful and meaningful retirement. Retirement is far more than just a financial event. It's a significant life event, a major transition, which will bring with it new challenges and opportunities. So each episode contains tips, information, and inspiration to help you feel more informed and confident about your retirement. I hope you enjoy today's episode. Hello and welcome. I'm really pleased you've joined me for this episode. This week, I'm excited to share with you a conversation with the author and NPR Planet Money co-host, Jacob Goldstein. In the 2008 financial crisis, Jacob realized he knew nothing about what was going on. And in trying to understand what was happening, Jacob discovered that money is actually fascinating. He has recently published a book called Money, the True Story of a Made-Up Thing, in which he explores where money came from, why it matters, and whether Bitcoin will still exist in 20 years' time. In our conversation, Jacob shares some of the discoveries he made while writing the book, what some of his findings might mean for this generation of retirees, and what he thinks the future will hold for developments in currency. I hope you enjoy my conversation with Jacob as much as I did. So welcome to the Retirement Cafe podcast, Jacob Goldstein.
Hi, thanks for having me.
I'm really looking forward to chatting to you, Jacob. Now, you've got a new book out, haven't you? That Money, the True Story of a Made-Up Thing. Tell me how you came to write this.
Well, I host a show called Planet Money, so it's, pretty close to my day job. But I didn't sort of grow up interested in money. I didn't study economics or finance in college. I was sort of well into adult life before I got interested in money as a subject. I'd always felt kind of a wariness, I guess, of money. Like, I want to have some money, but I was always wary of being like too into money, But then the financial crisis hit in 2008. Yeah. And I was a reporter at the time, and I worked at the Wall Street Journal, obviously a business paper. I covered healthcare. I didn't cover business.
Right.
And I was out to dinner with my aunt in Manhattan. She's a very successful businesswoman, and I feel like she would know what was going on. I didn't really know what was going on.
Can I ask you, Jacob, how old were you at the time?
I was like a grown-up. I was, 30, 35, about 35. So I was not a kid. I was not some little boy wondering about. I was a grown man who should have known the answers to these questions. But I said to her, look, like the stock market is down and real estate is down and like trillions of dollars in wealth have sort of disappeared, right? Like if you count up all the market caps and all the home values.
Yeah.
And it's like, this seemed odd to me, right? And so
where's all the money gone?
Where did it go? Right, exactly. Like what happened? Wasn't it just there? Where'd it go? And she said, she basically told me I was thinking about it all wrong. She said, look, money is fiction. Like all those trillions of dollars, they were never really there, like to begin with,
No.
No, they were just some numbers and now they're different numbers. And like that actually struck me as quite interesting, right? Like I think I had always before that, there's all these ways where money is bound up with morality, right? And so I had a certain wariness. I had a sense of like, oh, you don't want to be greedy. That's bad. You want to find a job that you believe in where you make enough money, but you don't want it to be like a thing you're interested in. But I realized I had studied English, right? And I've gotten into journalism kind of from that side. And I realized that money could be, and especially as I learned more about it, much more of a sort of fuzzy, interesting social thing than we usually think of it as. And so then I went and, got a job at this podcast covering money and the history of money and got more and more interested and wound up writing this book.
Wow. So for our retired audience and, this scary idea
Lots of time to read.
This scary idea that money, is all made up and fiction, this is terrifying. I'm a financial advisor.
Don't think too hard about it. You'll freak out like I did.
Tell me more about I mean, obviously we can read your book, but tell me, give me a synopsis. What was the big kind of discovery for you at that point where you're like, no, this can't be true. Money does exist. We know that,
Well, I mean, it evolved over time, but like she wasn't wrong, right? Like, yes, money, money exists in the same way the law exists or something, right? It exists because collectively we all agree to believe in it. And one of the really interesting things as I started working on the book and studying the history of money more is you see how much it has changed over time, right? I think my
Mm,
kind of unexamined feeling or thought about money is like it just kind of exists in this fixed way. Money is just a thing and you can like it or not like it, but it is just a thing. And that is definitely not true. Like one of the things I learned is it's not true. And you see when you read these stories from history how again and again people have really changed the meaning of money. People, not only did it get invented, it's been reinvented and reinvented and reinvented. It is this constant, well, not constantly, this frequently changing kind of set of arrangements. It's a much fuzzier and frankly more interesting thing than I knew.
yeah. So, of course, I mean, I think if we think back to our school days, we learned that money was there to replace a bartering system, I suppose.
Yes, that is the classic story, and it makes a ton of sense. Barter is really inconvenient. If I want something you have, I can't just give you money because it doesn't exist yet. So I have to have something you want so we can make a trade, or we got to find somebody else, and it's super inefficient. And that was the old money story from Aristotle through Adam Smith into the 20th century. But an interesting thing happened in the 20th century, which was this new discipline of cultural anthropology emerged, right? And people, scholars, started traveling around the world and studying different cultures, cultures that sometimes didn't have money, cultures that were, more traditional, sort of family-based, tribal cultures. And what they found was they didn't really see that kind of dominant barter economy that our origin story about money would suggest. Instead, what they saw was, in these cultures, they're pretty self-sufficient, right? They're,
Yeah.
kind of clans, groups of related people. They make a lot of what they need. What they have a lot of in these groups is rules about giving and getting, rules about gift giving, but also rules about reciprocity. If you're the recipient of a gift, you're on the hook now in a lot of places to give a gift. And various kind of important social moments have giving associated with them. So marriage is maybe the classic, right? We know of dowries, but this is formalized in various ways with different gender dynamics. You have to give someone's family some number of cattle, say, in a lot of places if you're going to marry them. Murder is another big one, a fun one, right? If you kill someone, you have to give their family some set of things. And what the anthropologists sort of figured out over time was like, these rules are really where we see the origins of money. And it's part of the reason it's interesting is, I think, the barter story is this very kind of formal, mathematical, impersonal kind of exchange. But instead, what we see is this much more social, kind of intense, right? Like marriage and murder and like even gift giving, like fighting over the check kind of rules. These are like the origins of money.
Yeah. Yeah. And so, I've often tried to explain to people about kind of the velocity of money, the banking system, and we had this thing called the gold standard, and that you borrow from one person and then you buy a property and then they lend on this. Explain how all this has come about. Do you think?
Wow. That's everything. You want me to explain everything? Well, okay. So one piece of that we can talk about is fractional reserve banking, right? I mean, if I have all the things, you sort of just did a whole everything of money there. But like, let's do one interesting piece. So there is this lovely story about the origin of fractional reserve banking in London, in the UK, but in
Yeah.
London specifically. And that is, it was in the 1600s, which you know better than I do, was a rough century in the
Civil
UK,
War.
in
Yeah.
England. Yeah. And so this was a moment, this was a moment when, there was a lot of danger and rich people started storing their gold with goldsmiths, right? Goldsmiths had vaults. They knew what to do with gold. And people would get a receipt. The goldsmith would give you a receipt for your gold. And those receipts themselves started circulating as money. And in fact, this is the origin, kind of a side note, but also really interesting, of paper money in England, in what would become the UK. And some of the earliest paper money in Western Europe period, the Swedes were doing it around the same time. But so it was these receipts for gold. Okay, so far it's just a claim check. One piece of paper is a certain amount of gold, and all the paper maps to gold in a goldsmith's vault. But then the goldsmiths turned into bankers when they took the next step. And this is the big step that gets at what you were talking about. They started making loans to people who didn't put gold in their vaults, right? So you want a loan from some goldsmith, Goldstein's goldsmith in London. You walk into my shop and I just write you one of these claim checks for gold that are now circulating as money, but you don't give me any gold, right? So I have other clients who've given me their gold. I got their gold, but now you have a claim check for gold that doesn't exactly exist, right? Like you can go out and use it as money. Somebody comes and give it to me. I could give them some gold, but there is now less gold in my vault than there are IOUs for my gold circulating, right? So this feels sketchy, and you should feel worried about this, right? Because if everybody with claim checks comes to my shop and asks for their gold, I won't have enough gold, right? So this is fractional reserve banking. This is the way banks work today. Not surprisingly, a few decades after this started happening in London, there was this panic when everyone's like, wait, the goldsmiths don't have enough gold. I'm going to go right now and get my gold before they run out. And it all kind of collapsed. And this is a fundamental thing about banking. And so we have financial crises, not particularly because bankers are bad or greedy or not for any moral reason, but fundamentally because banking is unstable in this way. And in the modern world, we've done a lot of things to try and reduce this instability. I mean, we have central banks like the Bank of England and the Federal Reserve as lenders of last resort. We have deposit insurance where the government promises you that up to a certain amount of money, your deposit in the bank is safe, backed by the government. And that helps, but still finance has this fundamental instability problem that all the money they say is there is not exactly there.
No. So of course, I think coming back to what you originally said, which is, it's a belief system, and this is quite interesting. My children, my youngest especially, is still young enough, I think, to believe in Father Christmas, and
I won't tell.
And hopefully
they don't listen to the show.
Hopefully that our belief system, as you quite really said, a belief system that the bank is good for the money, or the Federal Reserve is good for the money. And of course, we know that currencies, and we've had crises in the last few years with Greek. Will they pay their debts? And countries across the world. So. And fundamentally, will an insurance company be able to pay out? This whole belief system and this trust in the system, I mean, is absolutely implicit, isn't it, in everything that we do?
Oh, yeah. I mean, in the modern world, really, money is trust in the government, right?
Yeah.
Like money is so closely bound up with the government in the contemporary world. Like essentially what is behind, the pound is the UK sort of as a going concern, right? Like that is what it is backed by. What is backed, what is behind the dollar is America as an entity, and only that. On the other hand, that's a lot, right? Like that's not nothing, but it's very abstract.
It is. And so with the governments, obviously, in this current kind of pandemic that we're in, and governments are printing money, as we hear all the time, and debt is going up and up and up. Is the trust in money disappearing?
Well, no. I mean, no, you would think it would be, right? But there's a simple way to measure that, really, right? Which is interest rates. It's the boring but robust answer, right? Because we know that when people are lending money to somebody or to some entity, the more confident they are in that person's ability to repay, or that entity's ability to repay, the lower interest they demand on their loan, right? If you're lending to somebody who might not repay you, you're going to demand a lot of interest to make it worthwhile. But if you're really confident that you're going to get your money back, you'd be like, no, take it and just give me whatever, 1% or some absurdly low number. And what we see in this crisis is governments certainly the UK and the US governments can borrow money at incredibly low interest rates. And so that is, people can say whatever they want, but like what we should watch when we're asking this question is, what do people with money actually do? And demonstrably, people with money trust governments with their money now. They are lending it to them for almost no interest. So people say things, but what you should look at is, what do people with money do?
Yeah, great. Absolutely. So one of the other concepts in your book, which I found interesting, is time is money. Tell me more about that.
Well, so there's this phrase in the book that I like a lot, that is maybe a variation on time is money. I found it more grabby than time is money. And that is the essence of finance is time travel.
Yeah.
And I should say, I didn't make that up. I got it from a writer named Matt Levine, who writes for Bloomberg News Service. And he's great. He's just this brilliant, really thoughtful writer. And the idea there is this, is the basic thing that finance does. We think of finance as like rich people or whatever, but there's a really basic, simple function that finance serves, and that is to move money around in time, right? So, I mean, if your audience is retirees, they are the beneficiaries of that, right? Like, you're working, it's the middle of your life. You have at this moment, thankfully, I'm in my 40s, my prime working age, and I'm fortunate enough to be making more money than I need right now, right? Yeah. So I don't want all the stuff I could buy now. I want stuff later.
Yeah.
And what finance allows me to do is give my money to other people who want money now, but don't have it. Right. So the financial system stands between me, who wants money later, and people who want money now. Now, I'm also somebody who wants money now, right? Say I want to buy an apartment, right? Like, very often we're on both sides of this. I have a mortgage, right? So what a mortgage means is, I want to buy an apartment that costs hundreds of thousands of dollars. I don't have hundreds of thousands of dollars now, but I'm going to live in this apartment for 10 years. I'll make lots of money over the time I live in the apartment. So what I want is some of that money I'm going to have later from, my work 5 years from now. Give me that money now. Move that money in time to me now. And the financial system does that, right? Yeah. Somebody has extra money now, they give it to the bank gives it to me because I need money now. And so it's this moving money back and forth from when you need it to when you're going to have it. That is the truly useful thing that finance does.
Yeah. Yeah. So, I mean, if you go through your book, which is absolutely fascinating, the whole history of money there, right back from the Chinese to the shenanigans of London and jewels and all types of things. But what do you perceive the future of money to be?
Well, that's an interesting question. I mean, the most important answer I have to that is I don't know. I mean, one of the really striking things in the book is how many times there were big changes that people didn't see coming, or that really smart people thought weren't going to happen. I mean, the end of the gold standard was not that long ago, right? No. The end of the gold standard was the 1930s, not even 100 years ago. There are people alive who remember it. And at that time, the smartest people in the world, I mean, there were a couple of really smart people who saw what was coming, but many really smart, really powerful people just assumed, they didn't even think, they just took it as given that the gold standard was the only way money could work. Like, if you were a civilized nation, you used the gold standard. And, like in the US went off the gold standard a couple of years after the UK. It was 33 in this country, I believe 31 there. When FDR, Franklin Roosevelt, the president, told his own advisors in a private meeting that he was taking the country off the gold standard, one of them said, "This is going to be the end of Western civilization," right? Like, and he was wrong. It was, in fact, a great move. It helped, get us out of the Depression. So I don't want to be the guy who's like, oh, it's going to be the end of Western civilization. We're going to be wrong. Like, I mean, people talk about Bitcoin. I do feel like Bitcoin seems somewhat unlikely as the next kind of money, just because government is so central to money now, that to shift to a world where you have money that is not government money, seems unlikely. I'll say, having said I don't know and all that about what I don't know, governments letting go of money seems like a long shot to me. That's That's a guess.
Yeah. Yeah. I find the whole, cryptocurrency and the Bitcoin kind of world very intriguing. Slightly worrying because of the lack of control over it, but of course that's you could say it's very democratic as well. Then, but it all depends on its uses.
I mean, the lack of control is definitely by design, right? Like people who like it believe in the lack of control. The point of Bitcoin from the point of view of, we don't know the actual person who created it, but we know the community it came out of, right? And they were techno-libertarians, right? They believed in decentralized power over money, and they didn't want the government to have control over money. So it's a very different worldview. It is striking that, Bitcoin's been around for more than 10 years and its price goes up and down. At this moment, its price tends to be quite high, but its use as money remains minimal, right? It's been around for a long time now. It came out, say around the same time as the iPhone. A little later was the iPhone 07. I should figure that out. It's a good comparison. Bitcoin came out in 2008. In any case, not long after the iPhone. And, almost nobody uses it actually to buy stuff. No.
And then, of course, one of the arguments that's been put to me is that, when it's needed and people have possibly lost faith in their kind of traditional currencies, that they will be turning to the Bitcoin. But I still think it has to be traded for stuff, doesn't it? I mean, that's the whole purpose of it. Is the whole purpose of money.
I mean, the simple definition of money is it's what you use to buy stuff.
Yeah,
like it's a functional definition.
Yeah. Well, fantastic. I mean, I really, I could talk to you for hours, Jacob, but I'm not sure my listeners would want to listen to us chatting for a couple of hours.
If they want more, they can get the book. I read the audiobook, so if you want, 5 hours of me on money, you got it.
So where can they find out more about you and your book and maybe even hook into your show?
So the show's called Planet Money. The book is called Money, The True Story of a Made-Up Thing. Google it. It's a good book. It's a good show.
Absolutely, and I'm sure all good bookshops will be stocking it. So,
I hope so.
I'll put information in the show notes, and I really enjoyed chatting to you this morning.
It was great. Thanks so much for having me on the show.
Pleasure, Jacob.
Thanks once again to Jacob for sharing his story with us. To find out more about his book, Money, The True Story of a Made-Up Thing, and his radio show, Planet Money, check out the show notes on our website at theretirementcafe.co.uk, where you'll find some useful links. Next week, I'm back with the third episode in Series 8, all about the 9 accelerators of successful retirement planning. I'll be chatting about minimizing lifetime tax and where this fits in with the retirement planning process. To be sure not to miss this episode or any future podcasts, why not subscribe on our website or your preferred podcast player? And if you've enjoyed this episode, please do leave us a review on Apple Podcasts. To get in touch, you can find me on Twitter at JustinKingCFP, or you can email me on hello@theretirementcafe.co.uk. I'd love to hear what you thought about this episode, or if you have any ideas for future podcasts. So until next time, this is Justin King, helping you feel more informed in your retirement.